Welcome to today's daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Thursday, the 9th of January. Well, we have seen a sharp move out of safe haven assets. The big flow away from gold, away from the yen, away from treasuries has been ongoing through the past 24 hours. The rhetoric has significantly dialed down in the wake of that Iranian missile response yesterday morning, and subsequently, with no US casualties, it seems as though that Donald Trump is perfectly happy to let the situation just settle down, which is a positive for markets' risk appetite. Certainly you've seen that through the VIX falling back, but also look at Treasury yields. That 10-year Treasury yield bounced, what's that, 17 basis points off yesterday's low, where we currently sit now on the 10-year yield. You can see the gold price high yesterday was 1610. Now 1546, that's almost $65 off that high. So a really significant move back on gold. We've seen equity markets which have rebounded strongly. The S&P 500 all-time high yesterday, not in a closing basis, on an intraday basis, but still an all-time high nonetheless. And we've seen that reflected through Asian markets. Strong move higher on the Nikkei and the S&P, and the Shanghai Composite. But that has also been reflected through the DAX. DAX strong gains today as well. Now, a little bit of outperformance on the DAX compared to CAC and FTSE certainly, but DAX does tend to move the most when you see the risk appetite moves coming through. So subsequently, we've seen that today. So really strong moves. Let's look at this oil price. What a turnaround. High to low range on oil, 10% on a daily range. Now, average true range is just $1.50 on oil on the WTI. It was $6.50 of range yesterday, so really significant turnaround there. But we still see that I think oil is remaining in this recovery uptrend, and weakness generally would tend to be seen as a chance to buy. Sorry about the dark green colour there on that trend. In terms of risk appetite, we can now look towards the US-China trade agreement signing of the phase one next week, and subsequently that is also adding into this improvement in risk appetite. The Chinese yuan strengthening further this morning. So lots of key moves being seen. Now, in terms of data points, not a great deal today. We've got Eurozone unemployment, don't know why that says 160,000 there. It should say 7.5%, which is equal to where it was in October, so no change there. Also this afternoon, we've got the weekly jobless claims at 220,000, which again would be very similar to where we saw last week, which was 222,000. Other than that, we've got a few Fed speakers today. Richard Clarida, who is the vice chair on the committee. He's a mild dove, so it'll be interesting to see what he talks about. Neil Kashkari, uber dove. He's also this afternoon, and as is John Williams, who is a centrist. So we could get a bit of an interesting take on how the Fed's sitting at the moment. So, with regards to my charts of the day, we're looking at sterling yen. You saw a brief look at it there, and let's have a look at the chart now. Now, sterling yen has been strong, obviously with the breakout above 141 figure, which effectively was the equivalent of cable breaking out above 130 figure. We've seen that that little retreat since that election result came through. That retreat that we've seen has based the support around 141 figure again. So really decent looking support band there. We've got the old breakout levels become supportive of 141 in the past month. And again, yesterday, pretty much to the figure, bouncing off 141 figure. Strong bull candle actually. You could argue a bull hammer, as sterling has continued to hold up pretty well relatively. And this sort of turnaround and the deterioration in the yen has helped sterling yen to break out above this downtrend of the past month, 3 or 4 weeks. Look at the stochastics. gaining pretty strongly. MACD lines nicely holding above neutral, as is the RSI above 50. So would suggest that weakness is a chance to buy. So the fact that we've had that bull candle coming through yesterday really does suggest that the market is sort of positioning stronger for a buying opportunity. We can see that I'll get the crosshair going. You can see a bit of a pivot around 142.80, 142.75, 142.80. It's the basis of support this morning. 142 figure as well. A little arguable that that comes in as an old support and came in yesterday as a support area. But it's very interesting that any sort of weakness, I think, back towards 141 figure seems to be bought into at the moment. And the bulls will be looking for a continued breach of this downtrend up towards that 44.35 level, which was the early January high. If the bulls can break out above that, then you're looking back higher again. So this is interesting that it really does show that sterling is holding the gains that it had above 141 figure, equivalent of 130 big figure on cable, and still building for the likelihood of, I think, an eventual upside break, but still certainly needs a push on, but looking more positive again. So I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.